The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. I know when you listen to the advertisements as the radio shows come on, you'll listen about Tom O'Brien talking about gold. And Tom and I don't speak very much because he's so busy with all the things that he has to do, but I listen to what he has to say. And when he and I are on the same page, I would suggest you probably take a little more time and listen to it, because the last time we were in sync like this was back when the Japanese yen was trading at around 75, when Tom was calling about King Dollar. And we were looking at the yen around 75, and of course it went to 103, where it's trading at now. And I see the same things that he's seeing in gold, maybe from a little different perspective, because I'm looking at, basically pattern recognition. The first chart that I put in here today was the long-term weekly chart on gold back to 2008. As you can see, there's a Fibonacci number coming in here at around the 1160 level. It could have been made back at 1177 back at the end of June, but I think we might challenge that today with the Federal Reserve in. The next chart that I'm going to post in just a few minutes here is going to show you the daily chart and how we're looking at the time element that we're watching between the geometry of the swings. In fact, I'll do that right now so that you'll be able to, sort of follow along with me, because it's a very interesting phenomenon, because we always like the ABCD pattern forming, and we have this potential double bottom coming in here. And if you look at the time down between late August and mid-October, that is exactly equal to the day today, December 18th, to what we had from late October into here we are in the middle of December around the 18th. We had the full moon yesterday, which is also a little bit helpful, but if we get any help at all from the Federal Reserve today, no matter what they say, the market's going to be crazier than a witch at Halloween, but there should be some really wild volatility. And since we're coming down and we're a little bit below, we broke below the 786 of the last swing just a little while ago, below 1227. And if we can get a $50 break in here to around the 1170 level, I think that's going to be very, very an important support point in gold. I have an order setting in there to buy some, and we'll see if it gets hit. Now, if it doesn't, and it keeps going up from here, I still think we're making a major bottom here in gold, folks. This has got all the earmarks of something really significant happen. The reason why I'm saying that is twofold. One is the geometry of the charts are telling us that we have time and price squared up to come in around December the 18th. We've been talking about that for quite a few weeks now. And the price objective that we're looking at, the ABCD price objective, comes in around the 1175 level. We might miss that if in fact the market does go up from here, but that's going to tell us that gold is getting ready to potentially have a very good move to the upside. So that's the focus that we're watching today, is on the gold. Silver's acting a little bit more bullish than gold right now. The support levels are much higher in gold. In other words, we were looking to try to buy silver down around $18.50 per ounce, and it's trading $1.50 higher than that per ounce. So that's telling us that silver is a little bit more bullish. So this is what we're watching now. If we miss it today, in other words, that gold just takes off and runs to the upside, then what we're watching for will be the move to potentially go up to the first swing, and then we'll buy the first pullback, on the way back down. So that's part of what we're watching right now. Now, the next thing that I wanted to show you is the gold and silver index. The price that we're looking at, I'll repeat it again, in the gold is if we could get about a $50 break per ounce today with the Federal Reserve, and usually it's the Federal Reserve that, you know, triggers these things with whatever they say, and believe me, they already know what they're going to say, so they're positioned in the market the right way. You can flat out bet that, and so we'll see if that's going to, you know, affect the market. But we're watching potential in gold here to come down to the 1170 area, touching the low we made back in June. Remember that we have very, very few bulls left in the gold market. Most people are incredibly bearish in gold right now, and so this is the time where we want to be looking to take the contrary opinion, especially when we have the pattern set up like we do right now. Whether we get the final break that we need down into this 1175 level, I would like to see it because I like to buy it as cheap as possible. But in fact, what I'd like to do is to see what happens after the rally starts. If it does, we would be able to get back between the next level of the 618 retracement of this next swing up. But that'll be 3 or 4 days, maybe a week down the road if we miss it. We'll have to wait and see. We've been talking about American Barrick Gold here, which is one of the larger stocks that we watch here in the gold section because it's the largest of the gold stocks that we follow. It's one of the largest U.S. gold. I think it is the largest U.S. gold producer. And we had a beautiful Gartley on that down around the 15 level, and we've already moved up a little more than 12% in a very short period of time. And you notice that it's going just the opposite of gold. You know, gold has been going down, and American Barrick has been going up. Remember, this stock has been hit very, very badly. Its low was way back in June, when gold was making its low, and actually American Barrick made its low around the 4th of July, and has since made a perfect Gartley pattern down around the 4th of December, and now we're making a pretty good rally off of the bottom here. So we think the gold market is turning in here. It'll give you plenty of chances to buy it if we miss the bottom today. So what we'll do now is just wait and see what happens. A good way to possibly trade this gold market for those of you that have, and if we're correct, and therein lies the $64 question, is a good way to trade this would be to use that ETF that they have for gold, which is GLD. And you'll notice this one is also making a really nice Gartley pattern here at the bottom. If you'll give me a second here, I want to blow it up so that we can see it, really clearly, because it's a weekly chart and it goes back quite a ways. This is what we look for. It's got all the things that we want. We're right at we've made the 786 and we've held the level pretty well. So if you wanted to be an investor in gold and you've been waiting, I think today's the day. I'd be looking to buy GLD. Probably should wait to the close just to see what the Federal Reserve does, but I think that it's in an area where it certainly wants to be looked at from the long side. This is a contrarian trade because everybody is looking at gold as a potential big bear market, and it has been in a bear market. We've been saying that since $1,810 an ounce when we failed to make the second high. Well over a year ago, and we've been going down with lower tops ever since. But now we're receiving the first buy signals that we've had in a very long time on a pattern recognition swing basis. So it's going to be interesting to see. The fact that silver is holding up better than gold, that's the poor man's gold. It could also be, something I think that is relatively important. We'll have to wait and see. Someone asked the question, how did I pick the price of, $1,170 per ounce? Basically, all I do is, as a matter of fact, if you'll give me just a second here, I'll show you the chart that I'm looking at to give you an idea of how I do that. If you'll give me 1 second, and if I can find it, which I should be able to, without too much trouble. I've got it here. I just have to change the time to hourly. And I will bring it up here, and I'll show you what I'm looking for. I'm going to draw this big butterfly in on the hourly chart, and you'll see how it comes down to the the 1170 level at the 1.618 expansion. I'll put that in here so you can take a look at it. And I'm assuming that there'll be something in the Fed minutes today that might push gold down. The fact that maybe they'll say something that they're worried about disinflation or something like that. And, anybody that's been to the supermarket, especially over the holidays, realize that, the price of food has gone anywhere but down, that's for sure. Even though the price of corn and wheat and some of these other commodities have gotten hit really badly, it hasn't it has not been passed on to the consumers, which is normal. That's the usual case. So what I'm looking for here is a 1.618 expansion of the past 2 weeks move from December the 3rd. That takes us down to around 1176. The old low we had in June was 1177, and that's what we're looking at for a potential move in gold if it does hit. And, who knows, it might not hit at all. And we might get a move to the upside, and if we get the move to the upside and it exceeds 1270 per ounce today, another $50 up in gold, then I would assume that this cycle has already bottomed back on December the 2nd, a couple weeks early. And remember, it's a weekly cycle, so 2 weeks off on a weekly cycle isn't too bad. But I think we're in the time zone here to take a look at it. So if we miss it, it'll give us a chance. Believe me, the market's been bearish, so the first rally up is going to scare the shorts, and then then it'll come back down and scare the bulls one more time, and that's the probability of where we'll look at it. So you'll get plenty of time either to get in one of these gold stocks or the GLD, but I recommend GLD for most folks because it is an ETF, and it doesn't have the same volatility as the futures, and it doesn't have the margin requirements of trading a futures contract, which is really good. So something you might want to think about for your 401k. Remember, the long-term chart on gold, folks, started back in 2003 when gold was down around $260 per ounce. And we went up to $1,932 per ounce a year and a half ago. Now we've made this huge ABCD correction, and it's come down to the 61% retracement of the 2008 low, which was down around $660 per ounce. And we are at the 38% retracement of the low from 2003. So we have got some pretty strong numbers in here. The time is correct with the time and price being down with the geometry that we look at. So those are the things that we're keeping an eye on here. We'll see if we've got the Dow up about 23 points today. The New York Composite is down just a little bit. The Nasdaq's down more. I guess it's getting hit because of Apple and some of these other things. Apple's down about 12, which is quite a bit, but that's coming off that big 618 up there around the 570 level, so that's pretty much top. I'm going to take a little break here, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, what I'm going to do next is, because it's Fed Day, I'll just share with you how I prepare for it. I'm going to start out with the Japanese yen US dollar cross rate, and I've posted a 15-minute chart here going back over the last few days. It's not goes back about 8 or 9 days, about a week. And so as you can see, the top part of this range up here is at 103.60. That's about 50 pips from where we are right now. And on the downside, I'm looking at 102.07 as potential support, and that is the potential low range. So the range here I'm looking at is about 150 pips from low to high. And sometimes on Fed days they hit both of them. They'll hit the high and the low, or the low and the high. So this is how I prepare to see what's going to happen, because I'm a pure technician, folks. I don't know what they're going to say or how they're going to say it, but frankly, I don't think anybody else does either. So the only thing that I have to go on, is the price pattern of what I'm trying to see in the patterns themselves. And the next chart that I wanted to show you here, I think, is a very important one. This is the Nikkei Dow futures. And how it relates to the to the U.S. dollar versus the Japanese yen. I'll put this in here, and you'll take a look at it. The dark line that you're looking at, the dark chart line that you're looking at, is the Nikkei Dow. That's the Dow Jones type of index for the Nikkei stocks in Japan. Now remember, this is much, much thinly traded than the Dow of our variety, and it is not that, it's a big market, but not nearly as big as ours. But what's important here is to look at the fact that we have the overlaid on top of it is the U.S. dollar Japanese yen cross rate, the Forex cross rate. And what I want you to notice here, if you look at where we are right now, you'll notice in the currency, we've made 3 higher highs. We've made a 3 drive to a top in the currencies, and yet with the Nikkei Dow, we're making lower tops. So we have a pretty strong divergence here. And if you go back and look in the May of last year, you'll notice that we had a double top in the currency, and in the Nikkei Dow, and we didn't have that in the futures themselves. So when it gives you that type of divergence, I think it's worthy of some decision making on your part. And since we have the Fed coming in now, that's what I'm looking at. I'm expecting the dollar yen to weaken, and I think that we're going to see it come back into this 100 level, maybe even nearly that much. Of course, if we get above 104, I'll certainly be wrong, and then we'll have to look at it a little bit different way. But that's what we're looking at right now here with this dollar yen coming into Fed time. Remember that the Fed is really, by the way, I don't know if you folks know this or not, but this is the Fed's birthday week. On Christmas Eve, 6 days from today, on the 24th, Christmas Eve, that's the birthday of the United States Federal Reserve System that started in 1913 at Jekyll Island in North Carolina. And I believe that, that was the start of the whole big deal. So we'll see what happens with it. And, of course, they're the most powerful organization in the world because they control the money. And like Thomas Jefferson said, you can take all the standing armies that you want, but if you let me control your currency, I'll own the country. And sure enough, Thomas Jefferson was right again. Okay, that's the Nikkei Dow that we're looking at, and I showed you the parameters that we're watching in the Japanese yen for today's move in the Federal Reserve. And believe me, folks, the CNBC and Bloomberg and everybody else, they use this as a tremendous vehicle to bring people in to listen to what what people want to hear. And then they have guests on that. Jekyll Island was in Georgia. I'm sorry, I believe it was in North Carolina. I believe. I'll have to double check that. I don't think you can have an island in Georgia. Oh, I guess it was Georgia. I think you're right, Andy. So Danny, I must be wrong, but you know why? I don't know why I thought North Carolina, because you can't have an island. It must be out in the middle of the swamp somewhere or something. I don't know. I know it's a resort area, and I don't even know if it still exists or not. I don't know if you know that. If someone knows if it still exists, they'll figure it out, I suppose. Okay, I want to go in and talk. We got to take a break. Talk about bonds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we've got our first caller. Bob from Colorado. Are you there, Bob?
Yeah.
How are you today?
Larry, thanks for taking my call, but if you were talking about this Jekyll Island, I was talking to your reception that the island's doing well. People are very wealthy that live on Jekyll Island. Real estate's expensive.
Well, real estate's expensive everywhere except Tucson.
Yeah. Well, I mean, it's very expensive on Jekyll Island.
Yeah.
Anyway, and then they started before the Federal Reserve went in effect. They met a year in advance of that. And it was Mellon and Rockefeller, the DuPonts, the Lazars, the Rothschilds, and J.P. Morgan was the one that really actually organized the Federal Reserve.
Yes, absolutely.
The old man. I've researched it a lot. It started with 12 people. Now it's like, 263 members or something?
Well, I know you and I are involved in it, so I guess that's what counts.
No, we're not involved in it. I mean, they can just print $85 billion a week. Anyway, I'll let you go.
Well, thank you for calling in, Bob. I appreciate it. How's your weather there, by the way?
Probably it's going to get up about in the 50s. I got snow on the ground, but 50s and stuff. Got to ask you something. Just cover over natural gas if you want to real quick.
Sure. I'll be happy to take care of that. I'll let you go, and then I'll cover natural gas as we go off the air. How's that?
All right. Thanks. Bye.
You bet. Okay, folks, what I did was I put in the chart. Someone asked me about the chart for Apple, and I put in the weekly Apple chart. And as you can see, when we were up on the weekly chart, up in September of last year, when Apple was trading at $703, that week there were 34 analysts that came out on Wall Street. Every single analyst was bullish on Apple, with price objectives anywhere from $850 to $1,200 per share. And then, of course, the stock dropped in half. And so when you see that everyone is on one side of the market, that's when you got to be looking at the other side of the porch. If you look at pattern recognition, swing trading like we try to do here. So what we're going to do now is we're going to try to help Bob out here for a second and take a look at natural gas. I know it's had a pretty good rally here because of the cold weather that's been going on, but frankly, I don't trade this too often. So we will take a look at it here as soon as I get the data up and running. And here we are. Oh, it's had a nice run here just recently. Wow, it's had a pretty good run. And we are moving higher. It looks like, I think we're getting ready to, either we're making a double top in here on natural gas, or we're probably going to, back off. I think if it backs off, you got to look to be a buyer in here. But we've been up for, this is a weekly chart, so we've been up for 8 weeks. And this is the first time we've had a little bit of a pullback in this, so I wouldn't touch natural gas from the long side as yet. I'd wait for a pullback to buy it. I have very, very poor success buying breakouts. I don't know if that's just indicative of, what I look at when I'm trading or not. I don't know. Okay, the next thing I wanted to go back to, I want to go back to this Federal Reserve thing today because of how they handle the markets and, how people are so emotional. And one of the most emotional markets that we have during the Federal Reserve, understandably, is the 30-year Treasury bond. And what I've done now is gone back over the past 2 weeks and looked at the range in the Treasury bonds. And as you can see, back on December 6th when we had the FOMC meeting, the market broke very badly and then came right back. And what we've done now is we've put in an ABCD pattern in the Treasury bonds that shows there's going to be pretty strong resistance up around the 131 level. That's about 1.5 points higher, and 1.5 points lower, actually 2 points lower at 127 would be some pretty good support. So those are the ranges that I'm looking at. The reason why I'm looking at those ranges is those are the ranges that I'd like to trade at today. In other words, what I'll do is I'll put a very small order in. I'm not going to put a large order in, but I'll test the waters up there at that 131 level because it's going to be very, very fast and very, very crazy. And on the bottom side, I'll be testing it at the 127.16 level. And I'll be risking about $1,000 on those contracts, which is a full point in bonds. You have to when the Fed is in there because it gets so crazy. And you don't really have much of a chance to act. Proof of that is if you go back and look on the December 6th, the amount of time that it spent down at the 128 level was a matter of a couple of seconds. So if your order wasn't actually setting there, you literally would have been you wouldn't have been able to get on board until the market rallied almost 2 points. So unless you use a buy stop, and boy, using a buy stop at a time like that or a sell stop is pretty risky on Fed Day. Smart people. And I know some of those smart people, they actually wait for half an hour after the Fed has left the building before they do any trading so that the Fed's, emphasis is gone and the traders are back to beating each other up, and then they go into the market. I'm looking at a couple of situations. One, like I mentioned, in gold, down around that 1170 area. If we are fortunate enough to get a $50 break in gold, and it appears that it's probably not going to do it because gold's basically unchanged today, but that doesn't mean it can't break. And then also in the Treasury bonds, I'm looking at those, a point higher and 1.5 points lower on either end of that range. And the other one that we looked at was the Japanese yen, looking to sell the Japanese yen versus the U.S. dollar. If it gets up to the 103.60 level is what I would be watching. On that one, I would be risking put a stop above the 104.25 level, so that's an acceptable risk of about $700, so that one's okay. Now, I did post a chart for Apple. I've had another question regarding the Apple. basically what Apple has done now has made a perfect ABCD pattern. If you take a look at the weekly chart, the ABCD pattern measures exactly to the high we made on Apple back at the 578 level just a few days ago. And in Gartley, H.M. Gartley, in his book, Profits of the Stock Market from 1937, said to sell the first ABCD correction in a bear market. And if you're looking at that weekly chart in Apple, this is an ABCD correction in a bear market, so you have to be short Apple. It's down about just about $30 from the high that it made at point D. But if you get another rally here over the next few days as the people come in and buy more iPads and iPhones and all the other things that they buy, they might get another rally up into this level. There was some news today on Federal Express. Their earnings were about as expected. Actually, the earnings came in a little less than expected, and the fact that their shipments are down this year, which is very unusual because this is the Christmas season, and they should be having, a banner year, given the fact that there's so much online buying that they're talking about in retail sales, and yet Federal Express is not showing that. Whether that's going to be affected in the holiday season or not, we'll have to wait and see. But if not, it won't make any difference because the Fed will come in with a QE4 or a QE5 in order to bail everybody out because they have discovered the secret to economics. You just keep adding money and everything will be okay. It's a little different than we've had in the past, but like the man said, this time it's different. So we will see if that is in fact, going to be the case. Now, last week I talked about the Swiss franc on a long-term basis, and I'm watching this position very, very carefully because we have a position that we're watching very closely in this, and that is I'm going to post it in here and take a look at it now because we have been in a really strong rally in this long bear market since last August, and we've made our first ABCD correction at the 382 level of that 88.50, and we're trading just a little bit above that right now. As long as this market stays above 88, I think it has the potential to move higher. That's what we're looking at. This is a completed pattern. The time and price between the A and B and the C and D are exactly the same, just like we have in the gold market. And years ago, the Swiss franc, was the stalwart behind the gold market. But over the past years, with the U.S. government, shaking out all the people that had hide their tax money over in Switzerland, that has no longer been the case. So my son-in-law just came back from Geneva, and a price of a Big Mac in Geneva is 15 euros. Folks, that's 18 U.S. dollars for a Big Mac. That's not the meal. That's just the Big Mac. And every meal that you go out for in Geneva is an expensive meal. The cost of living there is just absolutely very, very high. Of course, we just traveled to Hong Kong and again to San Francisco. Both cities are relatively expensive, but nothing like what we saw or heard about, in Geneva. However, as you know, Hong Kong real estate is incredibly, amazing. So, fortunately, my son-in-law was a guest there of the medical community because he's done some wonderful work with Parkinson's research. So, it's interesting here with the other parts of the world, how things go. London real estate is just going crazy, but, the food in London is still, relatively the same cost as New York. But, boy, I'll tell you, some places in the world, it gets pretty scary. And just be thankful for what you have, folks. And one thing I would mention during the holiday season is to try to give to people that have a lot less than you. We don't exchange gifts in our family. We haven't for years because we have pretty much everything we've ever asked for. And so we try to help some folks that have a lot less than we do. But don't send in your name now, folks, because we've already selected everybody for the year. So put your name in for next year, but this year you cannot send it in. It's too late. So just keep that in mind. But try to help some folks that, don't have any coats or don't have any food or, whatever it happens to be. There's some people out there that have a whole lot less than we do, and we should be very thankful. We live in a wonderful country that's got a hell of a lot of problems, but we're still going to work out of it okay. The question is that we will just take a little bit more time, to finally, to get out of it. So we'll see how that. I'll get off my soapbox now and get back to the market. So someone asked me a question about international business machines. So if you'll give me a second, I'll try to get Big Blue up here, and we'll take a look at it. It's been a pretty strong stock for quite a while, except until April. And if you ever believe in patterns, and I'm sure a lot of you folks do, I'm going to show you a pattern that we literally love to look at, and that is the 3 drive to a top pattern that we had in IBM back in February when it was trading at 213. It's now down 20% from that level, and it's still in a downtrend. We've had lower tops now all through this year, and that's the bottom line. IBM looks like it's getting ready to go down and test the 137 level. I know it's one of the big Dow stocks, and the Dow's making near new highs, but it's not because of IBM. It's because of stocks like 3M and American Express and some of the others that are actually going in that direction. So I had one other request here, and that is to take a look at Tesla. Never traded the stock, but we'll take a look at it here. Oh dear, this computer doesn't have it. Give me a second. It only takes me 1 second to put the data in, and then we'll take a look at it. This is here's another stock that's had a big move up. And give me 1 second, and we will put wow, this thing has gone from 16 to 194. Shut the front door. That's one heck of a move. Did you guys get my notice about buying that around 20? Okay. We had a very substantial break here recently, and now what we're doing is we've rallied back to the 61% retracement of the previous high, and I think that we're still ready to. This stock is pretty much in a downtrend right now. The one thing that it did do is when it was making the high, and I think we talked about this with our friend William from Singapore at the time, because I know he was shorting it up there at that 189 level, is that it was making a 3 drive to a top pattern at that time, and then it broke from 192 down to 114 when the cars start catching in fire. And now what they've done is they've included a fire extinguisher with all the new Teslas, and so that should take care of the fire problem. So that's another good thing about being able to be creative with your advertisement. You get a free fire extinguisher. Oh, and someone mentioned that you get a free fireproof jacket when you drive your Tesla. So that would be pretty good. And also, what they're doing now with Bitcoin is they're coming out with a new coin for a new purse for Bitcoin. It's a Bitcoin. It's made by Louis Vuitton, and if you buy $10,000 worth of Bitcoin, you get your purse to carry your Bitcoins in at the. We got to take a break here.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And coming into the end of the show here, I wanted to post the chart for the VIX index of volatility. And as you can see, we're right near the highs still in the stock market, and yet the VIX index has already started to move a little bit higher, which is telling us that there might be a little bit of fear coming into the market. I'll bet just a little bit of fear, not very much, but at least, people are starting to wonder a little bit what's going to be happening with this tapering. And frankly, I don't think anybody knows because it's just a giant experiment, and, we'll have to wait and see. The next chart that I'm going to post, you've seen many times before, and I'm going to put it in here one more time because I think it's very important. It matches all the others. And that is the fact this is the Dow Jones monthly chart going back to 1987 crash. And the thing that's important here is that if you look at that high in 2007, we exceeded that and went up to the 1.27 level at 16,200. But the New York Stock Exchange Index, which is the biggest one, didn't actually make that level. We got a caller here that we can end our show with, and that's our friend from Singapore. William, are you there?
Oh, yes. Thanks, Mr. Pesavento. I heard you mention about me shorting Tesla at 189. I think I want to clarify. I don't think I dare to take that credit because all credit should give to you because you are the one who taught me, how to, learn the pattern recognitions, how to forecast the the target. So I think the credit should be given to you. And that's how I mentioned now, Apple recently at 572, So all thanks to you for your guidance.
You have to put in the orders, William, not me. You have to put in the orders, and our time difference is 15 hours apart. So you take the credit for it, my friend, not me. What can I help you with today? You have a question on gold?
Yeah, I was just thinking about what you have mentioned. I think based on what you have mentioned, what you have taught, I think what is the probability of this, reversing at around 1178 or 79, the previous low? Do we have very good chances of reaching, reversing from there?
Yes, today could be today because of the Federal Reserve in here working. We need to get down about another $50 from where we are now. And the last time the Fed was in there, we moved $50 in one day. That was back on December the 6th. If we get, if fortune smiles on us and we get the market to break down to that 1170 per ounce in gold, that's where I'm looking to be a buyer. The silver market is acting, much stronger than gold this time, which could be a positive sign. But there's a big cycle, I believe, based on the work of time and price that I'm watching that should be coming in today, December 18th. We've been talking about this day for well over 2.5 weeks now. And so today's the day. So this is what we're watching. And, if we miss the bottom and it runs, strongly to the upside, we'll look to buy the first 61% retracement. And that's the way I would be handling it. But you just have to wait until the Fed finishes here. They come out in about an hour. So if you can be patient for another hour, hour and a half, we should have some more information.
Okay. I will monitor that. Thank you very much, Mr. Pesavento. Thank you.
Okay. Thanks for calling in, William. And happy holidays to you.
Happy holiday and Merry Christmas.
Okay. All right, folks, we're coming to the end of the show here. We got the Dow up 18, the NASDAQ is down a bit, the S&P's down a bit, and then the Russell's down a bit. So we'll see what happens with the Fed today, whether they do any tapering. We've mentioned the things that we're looking at in the Japanese yen and the bonds. See if they hit these. Live every day in an attitude of gratitude, and may God bless.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers, no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.